It's about that time of day again, folks. Good morning out there, 7:30 a.m. Eastern Time. My name is Joseph James. I'm sitting here in a comfortable chair in front of my screen here in Los Angeles, my home office. I'm Joseph James from School of Trade, and I've got Marty Errico braving the elements down in the NYMEX exchange. Marty's from Traders Audio. I'm from School of Trade, and welcome to our crude oil morning prep. This morning we're going from the screen to the floor, giving you what I think to be a very unique morning prep, a very unique set of analysis tools. First of all, I'm going to start with a technical analysis approach, moving from top to bottom, weeklies, dailies, hourlies, all the way down to a couple minute charts. And my job this morning is going to be to analyze the overnight session, the London trading session. Using this top-down approach, I'm going to anticipate direction as we go into the open between 8 o'clock and 9 o'clock in the morning. I'm looking for the highest percentage trading opportunities starting at 8 o'clock this morning. So we've got just about a half an hour to get ready for them. If you've been following along with me all week, you've noticed we've been pretty accurate, so don't be afraid to take notes here today, and I'll be posting all my charts up on our blog after we're done the broadcast. Once I'm done with the mic, I'm going to pass it over to Marty Errico. Marty's from Traders Audio. He's going to be providing what I think to be a very unique approach, which is providing pit analysis. Now, we've all heard about pit squawk. We've all heard this before. Hopefully, you've logged in and listened to Marty's broadcast. He broadcasts at 9 o'clock in the morning live from the NYMEX and broadcasting for crude oil and natural gas. And Marty's going to be analyzing what he sees from the floor. This is information that I simply cannot get here in my home office in Los Angeles. Going across the country, I'm going to start here on my charts, and we'll go over to the NYMEX, and we'll listen to Marty, and we'll see what he has to say. Very unique approach here, being able to start with the screens and then move right on down to the floor. Let's get started. First thing I'm going to do is I'm going to begin with a 4-hour chart. Now, we go over this each morning in our trade room. You can come out and join us anytime you'd like. I'm going to start with a 4-hour chart first. Most important thing we can see on this 4-hour chart, clearly we have a big move lower from yesterday. And of course, with every big drop, usually we get somewhat of a big pop. And the first thing I want to notice this morning is there is a wide open space, right? There is plenty of room here for this price to keep rising higher. So the 4-hour chart tells us that we have a most likely a retracement up into our trigger zone. This is a Fibonacci-based trigger zone. 9240 is going to be that level. So that's going to be the target here for this morning's trading, 9240. Remember that number. We also know that if price was to collapse, if price was to try to fall lower, we're going to run into support at 90 even, 9011, right? Look for support, 9020. So we've got support below us. Most importantly, though, looks like we're going to have wide open spaces here to keep cruising higher. So 9240 overhead and 9020 below. I'm going to buy at the support below. I'm going to look to sell at the resistance above. Got to get there first, though. Looks like this 4-hour, though, tells us we're most likely moving higher. Now, let's keep drilling down. As I drill down, I'm going to move now to an hourly chart. And this hourly chart, we'll bring that up real quick. And this one gives us a great clue. Now, remember, we had that level at 9240. So 9240 is right up here. So to get to that 9240, now we can see here on a 60-minute chart. There we go. We've got resistance starting at 9169. So this is a very big clue. To get to that 9240, we're going to have to break through that 9169. I'm going to be looking for a close of the candle above the 9169, and that will give me the confidence now to start buying long. Not guaranteed to get up to that 9240, but a close above 9169 is definitely going to be what we're looking for. One of the most important things about this 60-minute chart is that these levels are extremely important. For example, if I was to fall lower this morning, as we fall lower this morning, I would love to see a test of 9033, consolidation, and then a rise back up. Ultimately, I'm looking for a candlestick to close above this 9033, 9032. So if price moves lower, it's going to give you buying opportunities. And those buying opportunities, the biggest ones today, are going to come down around that 9030 area. As price rises, we really have to be patient here. I'm going to look to see a close above that 9169. If we get the close above the 69s, we know we're moving higher here. Now we do have one more level of resistance, 92.06. 92.06, does that sound familiar to you guys? That was yesterday's London low. That was yesterday's 60-minute level. So this now becomes a major turning point. If you look back at your charts from yesterday, 92.06, that was London's trading session low. This will bring us right back up into the range above us. So once again, a close above 91.69 is bullish, and I am buying long. Moving forward here now, drilling on down to a 30-minute. This 30-minute is going to show us quite a bit of the same stuff, 30-minute and 60-minute charts. We use the 30-minute charts because we have a lot of students in our trade room. We get a lot of traders out there that are maybe trading on smaller accounts, and 30-minute charts are always going to give you a little bit earlier signals here. Now, looking at the 30-minute chart, we can see another set of clues. First of all, price can move three different ways. If price moves higher, let me zoom out here a little bit for you. There you go. If price moves higher, we know a close above 91.69. If we miss the chance to get in above 69s, again, a close above 92.06. And we're looking good here to buy all the way up to 92.95. Now remember, we have that 4-hour level at 92.40. Make a great spot, take a partial profit target at that 92.40 if we're holding on all the way up to 92.95. I will be using these levels as the most important levels today. So again, a close above 91.69, I'm getting long. A close above 92.06, even more fuel on that fire, pardon the pun. And of course, we'll be buying pullbacks using our entry trigger indicators to get in all the way up to 92.95. What if price trades sideways though? Because that's likely to happen as well. Remember, price can move higher, price can move sideways, and price could also move lower. So if price starts to move sideways here this morning, we're a little bit out of luck. I'm going to be able to provide some short-term scalping opportunities, buying the lows and selling the highs. But for the highest percentage trades, we're going to drill down to our 5-minute chart for those fast time frame trades. So if price trades sideways, I'm going to move to my 5-minute chart and begin to look to buy the lows and sell the highs. For this purpose, though, if price moves sideways, I'll have to sit on my hands regarding my longer-term trades. If price falls lower, that would be the third scenario. As price falls lower, we have a demand zone, or as I call them, a buy zone. If you recall from economics class, markets tend to move from support to resistance, supply to demand, highs to lows. And nowadays, with so much algorithmic trading in the market, we can really predict these moves from highs to lows quite often. So we know now that as price moves from a resistance zone to a demand zone or a buy zone, it's a very easy job. I'm going to wait for price to start to move higher off that demand zone, and I will now buying pullbacks, of course, on the way up to 91.69. Take a partial profit target, hold that runner, because we want to get it all the way up here to the next sell zone, the next supply zone at 92.95. So once again, if price falls, I'm going to wait for consolidation and then wait for price to head up in my direction. Now, let's say price blows right through 90.74. We have a higher risk short below 65. Okay, higher risk, not necessarily higher risk, but lower percentage. I know that I want to buy in a buy zone. Selling the break of a buy zone when I have such a small range here to play with, right? If we had a wide range to play with, now there's some serious incentive. Now the risk to reward is worth it. But if I'm going to risk trying to take a trade in this small area, it better be good, right? It better be good. So we blow right through 90.74. We consolidate, and of course, this zone will be gone, and we'll now again look to see a rising back up. We're buying pullbacks, and we're going all the way up. This will most likely end up becoming a sell zone here this morning as it pulls off those highs. So that will become your target. So we can see here, price moves higher, price moves lower. If price keeps on blowing right through these buy zones, we're going to wait for one of them to hold, or that should be plenty of space here now below 90.33. So again, I'm going to skip selling between 90.74. I will, though, look to sell short here down to that 89.36, and that level is at 90.11. 90.11. Alrighty, I'm going to put all these charts up on our blog here so you don't have to worry about writing all this stuff down. And as always, let's finish up here before we head over to Marty in the NYMEX pit. Let's finish up with my VIP chart. The VIP chart is what I call the very important price levels. I'm going to take some time to analyze what's happened in London. The London trading session lasts from 3 a.m. until 7 a.m., in my humble opinion. And as you'll notice, I've got a simple opening range indicator on here that marks up my London trading session. So we get the London trading session marked up right in the, I guess you would call that white. Alrighty? Now, most important things you want to be aware of when it comes to this London trading session is that there is a reversal zone. We have the reversal zone above us marked in red, the reversal zone below us marked in green. This is the point at which we break out of London, and that's where we're ripe or we're susceptible to a fake out breakout. Now, yesterday, if you were watching yesterday we went down into that London bullish reversal zone. We chopped around a little bit, and we just kept on going. And if you guys are with me yesterday, remember, we broke right below 92, and it was off to the races, the downside. So look for price, of course, in this case, price rising higher this morning. Look for price to push up. You'll probably see initial test of that London 272. Wait for the pullback a little bit, and then again, a candlestick closing above that 272, and we are bullish. If you were following along from yesterday's charts, you recall yesterday we made it all the way through that 272, up to the 618, up to the 1618. So for all you runner targets out there, that London 618 up there at 93.24, that's your set it and forget it, as we call it in our trade room. That's your hero target, right? That's the home run target. And we're going to hit that about 1 out of 4 or 5 days. So it's worth holding onto that runner up to that 93.24, that London 1618. Alrighty. So we're looking for a fake out breakout here at the highs. I can also tell that the London trading session has moved a very wide range. And since the London session has moved a wide range, we know that one of two things is likely to happen now. First of all, we're likely to see a price reversal. When the London trading range is this wide, one opportunity is going to be a price reversal. So the next candle we see that closes back below London's highs, we're going to be looking for the shorts all the way back down to London's lows. At the same time, we also know that a wide trading range means people are participating. And this morning, we have 8:30 news this morning. We've got jobless claims here at 8:30 this morning, among a few other news reports. And so we know that this London trading range being so wide may also be a sign of things to come. It may also be a market that is going to start to run. So a wide trading range coming out of London puts us in the reversal zone. I know a 5-minute candle closing above 91.91, I'm getting long. I know that a close back below this London high, 91.65, I'm looking short down to the London lows. And again, don't forget to leave those runners all the way up above. Look for the fake out breakout first. If we close above the reversal zone, I'm getting long. Close below the reversal zone, I'm getting short. And again, this wide trading range from London's trading session tells us one of two things is likely to happen. We're going to get a full-blown price reversal, or we're going to keep taking off to the upside, and I'll be buying all the way up above that 91.91. Now, this is just one humble day trader's approach. I'm looking forward to hearing what Marty's got for us here today. Marty, grab that headset of yours and let's hear what you're seeing on the pit. I'm excited to hear if my analysis from my screens, if it has anything to do with your analysis from the NYMEX exchange.
Alrighty, thank you very much, JJ. Good morning to you, ladies and gentlemen. Well, we just had the ECB come out and hold rates 5.0%, 0.50%. So again, there's holding rates steady. They did not cut them. No change in rates, unchanged. So that just news hit the board just about 3 minutes ago. So again, we're watching just a little bit of a price reaction. If you saw a little flutter of price action, that was it. So speaking of London, there you go. So we're looking for an opening pit session above the 9160s today. If we can get an opening print above 9160, I would hop on the bullish train. Well, let's go back to Tuesday, and remember we were talking about those tail end of those call spreads hitting the market, and we saw a nice reaction from them. And the reason why we did was there was size associated with the trade. Again, over 17,000, 90 to 94 half calls, 91, 94 half call spread again. So we saw those big call spreads with size. They sold those 94 halves. They sold the 94 evens. And then we saw a pretty nice move to the bottom of a range. Yesterday in the pit, what we saw were 90 calls being purchased, over 2,000 lots in the front month June, in the weekly and in the daily options. So a lot of activity in that 90 call, 89 half and 88 evens also trade over 1,000 times. Vol extremely bid here, starting to soften up just a bit and come down, and that's pretty bullish for us. Again, if we're seeing lower volatility, these higher strike levels. So as vol comes in and trades lower, we'll see prices will trade a little bit higher. So right now, I got the implied volatility index at about 26% this morning here on the board. We talked about these big call sizes, and there wasn't that much size, but there was size associated with the 90 calls. So I would say that we could see a little bit of a bid off the bottom of a range. So we trade 91 halves right now. We look at Brent crude above $100 this morning, which is also promising to the upside. Brent WTI spread trades about 90.29. Calendar spreads are relatively tight this morning as well. We look at the June, July, we're talking 21 cents. June's Augie, 16 cents. June SEP, 09. So we see all these spreads relatively tight in the morning session. The crack values are also coming in just a bit. We look at our other indications. We look at our multiple market divergence, ladies and gentlemen. That's your RBOB, your heating oil. We see RBOB and heating oil also trading with a little bit of a little strength and a little bit of chutzpah off those lows. We see a nice bid here. So I got RBOB 272.57, heating oil 281.17, and so far this morning, as I mentioned, we did see a little bit of a bid in the London session, overnight session, with that Brent even trading higher as well. So that's our indication here. Again, morning opening print this morning will have to be above the 9160s, I would say, 57 to 60. We can get above that. That will be promising for the bulls, as we were trading at the bottom of a range, and that $90 level is being excessively bought. Again, from the pit, what they are doing inside, these are open outcry traders. These are the locals that we speak of every day. They are looking to buy dips. That's their strategy. They're buying dips. The market dipped down to 90. They want to buy it, and that's basically their sentiment. That's their thought process, and they don't let the bull get in the way, any type of noise get in the way, if you will. So inventory numbers, even though they were terrible yesterday, that just gave them a very good opportunity to buy. Who else is backing the big buyers? Right now, it's the first month. It's the first of the month, second of the month. So we have jet fuel buying coming in this week. It's another reason for the excessive bid. We have cruise liners coming in buying. These are physical delivery buyers. Again, we do a special call, and we look at these levels, and we look at basically the supply-demand differentials, and we see who's buying and how much. That's all we want to know. Who's buying and how much? Are they on their regular buying pace for the month and they're buying the regular physical delivery, or are they going to show shy? Now, a few other pieces of the data that hit the board. In respect to the number that came out yesterday, we're talking about the EIA petroleum status report. We saw a 22-year builds in supply. Again, 22-year highs in supply builds. So that's very bearish, but you can see the market's holding, and they're still buying 90. So they're not going to let this news get in the way. So I really think that we could see just a little bit higher prices. So we just talked really a bit about divergence first. We didn't really go risk on, risk off sentiment. Now let's talk risk on, risk off sentiment, and then we'll go to the internals, strike levels, and our pit session levels. So risk on, risk off sentiment. Right now what we see is we see your dollar quite soften up here this morning. We see crude firm, so that is promising here for risk on sentiment. Again, as the dollar falls, the crude trades higher, as this dollar is trading at the 81.57 evens. Off the ECB conference, again, no change in rates. Euro rising, dollar falling. We can contribute probably 80% of this move so far to the dollar, and we can contribute the other 20% to supply and demand. We can also take a look at the bonds here. They're also coming off their high prints. all the currencies, all the commodity currencies are rallying along with the crude. So we definitely have somewhat of a risk-on sentiment today. We're going to look at equity markets as well this morning to see if we can get some type of indication out of the S&Ps and the equities. And right now, as I look at your S&P and we look at your equities, they're trading higher as well. So definitely a risk-on sentiment throughout the day in the market, something we definitely want to keep an eye on for the rest of the day. So today, check, risk on, right? RBOB, heating oil, Brent, all trading higher, check. Implied volatility starting to soften up. There's a lot of delta in this market, 60% in these all recent strikes of 91 even, 91 half, 92 even, 92 half. Nice delta associated with the trade. Means they're buying the idea of movement, guys. They're buying the idea of movement here in the pit. We see vol rather offered out right now, getting just a little soft here. Again, we'll get the real deal when we open up around 9 o'clock. We see exactly where our opening print is, and then we see where vol is, OVX index, etc. Open interest, again, in the options. As I mentioned, those $90 calls, very, very, very important. They came in with not too much size, but it's just really what was at 90. The vol was at the perfect amount of volatility. Delta was at the perfect amount of volatility. Gamma was nothing. Mark was nothing. So that was nice. So it's good to know that the $90 level is being bid, and we could see a continuation of that possibly into today. You know, they also went in, like I mentioned, the 89 half and 88 even calls. So if not, they're buying dips, and that's the sentiment down there, even in the options pit. Some strike levels where we can see a little bit of resistance at 95 and 94 half. It's really, that's all I see in the options. I see a lot of put buying at the 94 half and the 94 and the 95 even sets. 94 half, 95 even. Support, obviously higher range, lining up exactly with JJ's chart. You saw we're at the bottom of the wedge. 89 bucks, 88 bucks, the bottom of the wedge in the options pit. That's what they're buying. And also they're buying the 90, which is the low. They're buying dips. Simple as that. So let's talk about levels here for your pit session. High from yesterday, 91.58. Low, 90.11. Doesn't that sound very familiar, huh? 90.11. That's the low. We closed and settled. Well, no settlement prices posted on the first trading day, the month, so we have only a close number of 91 even. No settle. Again, they don't settle on the first trading day of the month in the pit. We had about a net change of a 50-cent lower yesterday, and we had about a $1.47 range. Today, your daily pivot is going to be 90.90. Your daily pivot's 90.90, which we are trading above right now, ladies and gentlemen. Taking a look at your R1, R2, R3, we're talking levels of resistance above. I got 91.69 on the trading floor here, what they got posted on the board at the NYMEX. I got 92.37 and 93.84. Once again, talking 91.69, 92.37, and 93.84. Some levels of resistance above where we can see the market trade up to. Support down below, I got 90.22, 90.11, 89.43, and 88 even. Again, that 88 even is going to be that low that they were buying those options calls at. So very important. Real quickly, ladies and gentlemen, we just talked about RBOB. We talked about heating oil. We talked about their ranges yesterday. By the way, RBOB had a huge day to the downside, almost a 10-cent decrease at downside. That's huge. Volatility just gets screamed up higher. We were looking at vol here at 25% in the morning, and we went up to 52% on RBOB. We saw it drop 10 cents. Now we're watching a bit of a reversal. Vol's a little soft this morning here, and they're starting just to show just a little bit of a bid in the options on the RBOB. Same thing, heating oil. Again, talking multiple market divergence. All these three products, they trade the same pit, so the market tends to go in the same way. It tends to correlate. Alrighty, so let's just now talk about the session levels for your natural gas, talk a little bit about natural gas, and then we're going to be sending you on your way. Natty gas, yesterday, very small range. What do we have today? We have inventory numbers, so it's going to be a nice volatility-packed day, I'm thinking here. We were waiting in anticipation of this all week. We've been trading in a very, very, very tight range on the natural gas from 420 up to 440, let's call it. 420 up to 440, very tight range at the 20-cent range only throughout the whole week. That's pretty low with volatility sitting at about 33%. Gamma was the only thing that's been bid all week, and gamma means break-even range. And I know there's a couple of gamma scalpers with me this morning. That's why I say it. Alrighty, so for your natural gas inventory numbers at 10:30 today, we're looking for 27 BCF. That's the number we're watching for, 27 BCF. If we get a build above 27 BCF, we'll be trading bearish. It will be a bearish-like reaction. We'll see prices trade lower, back probably down to 409. Hey, if we see that draw or we see some type of build below 27, that will be bullish, and we will see prices probably trade up to the high of a range, and we'll test that 450 level. Again, 409 to 445 was the range that a lot of traders were looking at the last couple days in natural gas, and believe it or not, we did get that range basically. We went up into the high at 444, so we're 1 penny off the high of the range, and now we're trading back here at the break-even level from yesterday. Yesterday's high, 444.40 at 4444. Your low, 431.5. We had a close, no settle on the first trading day of the month. Remember, guys, first of the month, no settle. We had a close at 432.60. Net change of about 4 cents lower. We had a 13-cent trading range, and your daily pivot, 436.20. Resistance above 440.90, 449.10, 462.20. Hey, we can maybe make it up to that level here after the inventories if we get a draw or a lesser than expected build. Any type of build above 27, remember, bearish. So below 27, bullish. Above 27, bearish. That's for the number EIA Petroleum says. All right, so support down below. I got 428 even, 423.30, and 410.40. So that's our plan here. Again, very, very simple plan of attack. It's as simple as looking at the trend on natural gas, looking for above daily pivot. We're going to see a very high volatile day. Expect vol to be extremely bid gamma to be offered, marked to be mid-range, ITM to OTM bid to offer, and then our delta probably around 60-70% because we're going to have a lot of movement associated with the trade after the number at 10:30. In anticipation of the number, we'll probably see a sideways chop, and I really wouldn't want to. I'd rather sit on hands, again, as we like to say here at School of Trade and in the trading room, sit on hands. One of the phrases I learned from JJ, right? Alrighty, so guys, it's 8 o'clock this morning. Once again, 8 o'clock this morning here. We're talking morning prep. Alrighty, so let's just here keep in mind we have some data points here out this morning real quick, and then I'm going to hand it back over to JJ. We have 8:30 ECB press conference in regards to the rate cut that they just, unchanged that they just had. They're going to be talking a little bit. Again, remember we had that Fed report yesterday, so those two put together will move things. We had the Challenger jobs cut rate here just at 7:30 a.m., which we just passed up. Again, numbers are in the box. Ladies and gentlemen, I have your numbers here at 8:30. We have a couple of releases at 8:30. We have international trade, jobless claims, and productivity and cost. 9:45 Bloomberg Consumer Comfort Index, 10:30 EIA Natty Gas, and then at 4:30 p.m. today we have Fed balance sheet and also money supplies. So that's about it this morning on a Thursday here. Again, I'm going to give it guys over back to Joseph James here. Have a wonderful day, ladies and gentlemen. See you all 8:50.
All right, thanks a lot, Marty. Appreciate your time. Thanks for all the great analysis. As always, guys, it's a pleasure to have you with us this morning. I just saw that clock tick 8 a.m. Eastern Time, which means we are out of time here this morning. Don't forget to come in and join me in my trade room at School of Trade. Don't forget to take a look at Marty's broadcast of Traders Audio. And every single morning at 7:30 a.m. Eastern Time, we do our morning prep from the screen to the floor. My name is Joseph. That was Marty. We'll catch you guys tomorrow. We got non-farm payroll Friday tomorrow. Going to be a big prep for tomorrow morning. And don't forget, guys, check out Traders Audio and schooloftrade.com. Thanks so much for being here. We'll catch you tomorrow. Remember, you got to learn it so you can earn it. We'll see you next time.